what to do with my money when I'm not using it. Now, there are two things you can do with your money if you decide not to use all of it, or probably just going to keep it in the bank for now. One, you can use it as a high yield savings account, put it in there, or number two, use a certificate of deposit. Let's get into these two things. So for the first product is a high yield savings account. A high yield savings account is an account that has a high interest rate. It's basically a savings account that gives you a bigger return for your money rather than a traditional savings account. And the interest rates can go up and down based on the market. So typically it'll go higher or lower, but for the most part, they're typically higher than your standard savings account. Also, your money can be taken out with no penalty fees, something we'll talk about later that a certificate of deposit can not do. You probably would like this just simply because you want to make a little bit more money, something that's higher, that actually keeps up with inflation rather than 0.05 a percentage for a traditional savings account. Let's take a look at this Chase savings account interest rate as an example right here. Chase savings interest rates, as you can see, is 0.01%. It's not even a full percentage, and interest is compounded and credited monthly based on daily collected balance. Kind of low, I guess you can say. But let's look at the other example for a high yield savings account. For the example of Chase Bank, not sponsored, you can have a high yield savings account with an interest rate of 3.80%, which is significantly higher than ones with a savings account. It just blows it off the water. So as of November 2024, the inflation rate in the United States is 2.7%, meaning the cost of everyday goods rises up year by year. So if you're putting in your money to something that's higher than inflation rate, you're basically beating it to get yourself ahead for the next year. So those are just some things to consider when putting it into a product that has a higher interest rate. So as you can see, if you just put $1,000 and not add any extra money, right, in the sample right here, in 1 year at a 3.8% interest rate, you'll get $38 at the end of the year. No money added. Now, if you did that with a traditional savings account, typically as you see in the bottom, the national average of 0.42%, it will be $4. That's it, $4. So that's a $34 difference just having your money do nothing in a high yield savings account and a savings account. So let's look into a certificate of deposit, another product that typical banks offer that again provides a higher interest rates than savings accounts. So a certificate of deposit is an account which you can deposit a certain amount of money to be locked into a certain period to gain interest, just like a high yield savings account, just a bit like that. It is a fixed interest instead of the market one like the savings account, so it doesn't fluctuate. Unfortunately, there is an early withdrawal. So because your money is supposed to be locked, you may be penalized a fee if you decide to withdraw earlier than the maturity date. And so there's different maturity dates that once the certificate reaches that amount of months or years, then you can take it out penalty free. Typical banks will allow you to take the money out, and if you do that, you'll pay a fee, but the fee is only based off the money or the interest that was made, not the principal amount. Some people get those confused. That's typical though. So talk to your bank about what products they have and the details about it. You'd want to do this to gain a set interest based on how much money you deposited. So it's a set it and forget it type of deal. And remember, you can also add more money depending on the product, so it will compound. It's good because when you have that, your principal plus the interest, and it just keeps gaining more and more money, helping you get ahead. So again, people who would use this would want a fixed interest. They don't want to worry about the market fluctuating. They would say, hey, I want 34%, write it out for 1 year. We'll take a look into this certificate, same concept. Now let's do it at a 5-year route at $1,000 deposited for no other monthly contributions. As you can see, after 5 years, that $1,000 becomes $1,205. Again, a great product as well. It really comes down to, at the end of the day, between certificates and high yield savings account, is which one will be best for you. Now, me personally, if you can hold on to that money and just let it grow for about 3 to 6 months at a time, you want to keep the interest rate for what it is, then hey, you know, long-term certificates could be good. But if you need that money sometimes just here and there, but you want a good return, a possible high yield savings account might go into your favor. So it's really about the strategy of how you want to kind of just let your money sit while you're trying to decide how you're going to use it. Two products, would you like it locked in for a fixed rate, or would you like to just have it there and kind of just be flexible with it and make a little bit more? But in the end, two great products just because you want to be above inflation. This is a Real Finance Foodie, and I want to say thank you for watching this video. I know it's been a while, but I'm going to get back into just teaching basic stuff everyone could do with their money. So hope to see you guys in the next video. See you guys.